Welcome back to Freedom Hours. Andy here again. Great to have you back with us today. Today I'm filming this video on the Gold Coast. Now I'm sitting across from one of the most richest islands in Australia. So over there they have average house values in the several $1 million. And why I thought I'd do this video today is talk about how far the property market will crash. You see, I understand that real estate markets globally are also very localized in regards to the values, the type of markets. But what got me concerned is the last few years in Australia we saw a 30% increase in real estate prices. Now, you have to understand, real estate in the past used to move 2 to 3%, would be big moves on a yearly basis. And now we're talking about property prices rising up 30%. In the Gold Coast alone, property prices you could have bought for a couple $100,000 previously are now around the $2 million mark. The house I'm in at the moment, which is one of the houses I own, is potentially worth about $3.5 million. So, property prices have gone up. And again, what concerns me is it's the people that can't afford to lose in this market may be the ones that lose first. So in this video, we're going to talk about how far property prices will fall, whether we think you should come out of the property market at the moment, and also looking at ways that you can reduce your risk in the property market. Again, as you can see, that's the Gold Coast. That's the Gold Coast beach in the background, sitting over the water. It's a beautiful part of the world, and it's really good. And you've got to think, how much would you pay to be in this part of the world? That's what we're going to shortly. So anyway, let's look at how far property prices will fall here at Freedom in Hours. Okay, so going back to talk about how property prices will fall. So we've been big buyers of property over the years, and I'm a big believer in purchasing lots of property and holding over the long term. If you remember playing Monopoly, where you buy Monopoly, you're then able to rent the properties out and collect income on them as people come around the board. Owning property is not a lot different. When you buy a property, you're actually buying a right to land or an apartment, and then you can rent it out to other people and earn rental income. That rental income then pays off the property, but you also get appreciation in the property price as well. So it works very well. What's happened though in the last few years is with the Federal Reserve in America and the RBA in Australia dropping interest rates to all-time lows, what people did is they decided to go and borrow what they could afford. Now in the past, when interest rates would say 7 or 8%, what you could afford would be a lot different. Mortgage rates would be about 10%. So, on a $400,000 mortgage, $40,000 would be interest payments. But when interest rates came down to around 2% in some cases, suddenly that $400,000 home became a lot more attractive. Suddenly $2 million, you're paying the same amount of interest. Add to that the fear of missing out effect, that people saw property prices going higher and wanted to jump in and join it. So you had this effect of essentially free money flooding the marketplace. So during the COVID pandemic, a lot of the banks were predicting the property price actually going to fall. I think the Commonwealth Bank, one of the banks in Australia, predicted it was going to drop about 10%. Actually, it didn't drop. From there, property prices went up 30% in a year, straight after the money was released. Now, what's happened is we're now coming to a position of high interest rates through inflation. Now, inflation is running about 9.1%. Now, I did do an article previously talking about how the Reserve Bank of Australia governor said that interest rates would not rise until 2024, at least. Interest rates are rising right now, it's 2022. What that's essentially done for the market is a lot of people, especially people that watch this video, when they talk about mortgages, thinking interest rates weren't going to rise, not having the financial education as well to know that how much interest rate rises can affect them in the future. They also did it because they thought and hoped interest rates property price is going to go higher. But the other challenge as well is with rents becoming quite hard in Australia, you can't find a rental, you want to buy a property, what do? You jump into it. So property prices skyrocketed now. In Sydney, for example, I think the average property price is about $1.3 million. I think the Gold Coast, maybe about $1 million or something. And what that means is if you're an average person earning, say, $80,000 a year, and you buy an average home for, say, $1 million, interest rates go to, say, 10%, you're suddenly paying $100,000 a year for your mortgage. You're earning $80,000. Say you've got combined incomes of $160,000, you're not paying enough to earn it. Now, again, I sounded my concerns with the property prices previously regarding it, but I think we're coming to the stage now with interest rates going up, a lot of people won't be able to afford it. And there's a lot of potential downside in the property market. Don't get me wrong, long term I'm a big believer in property. I believe it's a fantastic way to grow wealth over the long term. But in the near term, there's a lot of risk in property prices moving down. So what should you do? So I would, if you want to lock in your interest rates, I think the time's gone for that now. I locked in a lot of my interest rates at 2%. They're maturing in about 3 years. I'd look at maybe offset accounts. But a lot of people need to look at how you're going to budget your money and how you're going to actually go into the long term to stop it, because if you look at it, property prices, how far they've gone compared to the long-term average, they look overvalued. They look overvalued compared to what people actually earn income as well. Property prices are not the only things that are overvalued. If you look at stock prices, bonds, the whole bit, they're all overvalued. And I think it's because they've printed up so much free money. You see, the central banks really do have a reckoning to be had. They pumped the economy with free money for so long. Now rates are dropping. And now they're going, well, what should we do? We should raise interest rates. Guys, you messed up. You caused property prices to go to all-time high. You caused ridiculous assets like cryptocurrencies, like Bitcoin, Ethereum, as I said in other videos, to go high as well. You caused a situation where people were chasing the dollar versus investing for the long term. Now, there's still property value out there. There's still a place where you can get good value property with a good yield. But you really need to know what you're doing with your research. So anyway, we'll do future videos as well. We'll talk a bit about how to purchase good properties, what to look for when doing it. We'll kind of talk a bit more about how I built my property empire as well, so you can share in it too. But my concern is, if at the moment you're already at the margin with house prices, and you can't afford to it, you really need to look at your budgeting, look at what you're doing, and maybe getting people to, to move in with you maybe. It's quite challenging. Property prices potentially could drop 10, 15%, 20, 30%, it's hard to say. Michael Burberry from the Big Short, he suggested that we're looking at another market crash coming up. I'll do another video about that shortly. I have to say I probably do agree with him. House prices will fall, but the other outside factors, if the Federal Reserve decides to actually reverse their interest raising and drop interest rates again, we could see high inflation, we could then see property prices turn, and we could see it going away. So it really isn't a balance. Value-wise, property is overvalued. It's gone to too much of an extent. If you look at the Gold Coast here, even property prices of flats down there have gone up. They're going up too much in value. So I'd suggest looking at staying out of the market at the moment. Be careful about what you're buying. If you're going for a first home, that's different. But again, if you're looking for $1 million mortgage, $1 million home, 20% is $200,000 in Australia. A lot of people, especially young people, don't have $200,000. I'd pull back and look at other ways to make money. We've talked a lot about how to make money online, how you can start making money from nothing. Start to build a secondary income, start to build a secondary business, start to grow from that, and then you can use that money to build into investments in the future. But anyway, going back to it, house prices are going to fall. How far, it depends on what happens with interest rates in the next few months, but I see a lot of risk in the market. Anyway, let me know about what you think, how far you think property prices will fall. Check out my other videos about investing, such as the cryptocurrencies as well. Why you shouldn't buy cryptocurrencies. But we really appreciate it. We try and help you guys navigate the complex world of investing, but also ensure that you can make money while making sure you limit risk. In Freedom Hours, it's doing little things each and every day to build your financial education and your success in life. And again, do your research on property, do your research on investments, understand what you're doing, and make sure you reduce the risks. Anyway, that's all from me here, and make sure you like the video, subscribe to the channel. Thanks for joining us here at Freedom in Hours.